when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. Approximately 2 p.m. in Honolulu, Hawaii. It is Sunday, May the 8th, and that makes it Monday morning in Australia, the beginning of the trading week. Gold has been trading for about 2 hours, so this is the daily report for today, May 8th. We have gold currently trading unchanged to down about $1. We are looking at a 10-minute candlestick chart. Green represents up bars. Red represents down bars. I will try to consistently use this color from here on out. I am looking at a market that, if we look at the activity of the trading day itself, that's going to be this point, I believe, right here. We've got May 8th. The market did open and then went lower on the open as we watched it. You can see that it traded to a low of about 1490. At that point, it does seem as though it found some support. The market began to move up, and as you can see, we are currently trading at 1493.42, and you can see that this market is trading fairly quietly. We are looking at our daily chart. The daily chart that I have in here has our current Elliott wave count, our current channel lines, as well as our Fibonacci. I call it our main page or main chart. What we witnessed when we saw this incredible meltdown last week in silver predominantly, but in all the precious metals, in all of the commodities across the board. You do have silver trading up this morning at about 27 cents higher at 35.89. But you can see that we did get, in terms of a candlestick pattern, what is known as a piercing line on our daily charts. A piercing line, of course, is after the market has a sustained downtrend. We can certainly say that that is true. You have a market that opens at or below the midpoint. In the Forex cash market, it's going to always open at, simply because there is a price fix, meaning on a 24-hour market, except for the open on Sunday, one print goes to the very next print to give you that price open. But you can see it has closed well above the midpoint. In fact, I believe it closed $23 to $24 higher on Friday. And when we saw that market hit 1461, that is the low that we're looking at right in here. It really never looked back. It really never looked back. And so my belief at this point is that we are in a complex wave 4, and that is our intermediate wave count. Intermediate, and when I say that, what I'm saying is that we've got 1, we've got intermediate 2, intermediate 3. We are currently in our intermediate 4. That's all contained within a larger major 5 move here. And then, of course, there's the minor count that we look at, which is the actual count within that wave. And when I say minor, what I mean is that when we look at waves 3, for example, you'll notice that you've got different counts within that particular wave. So that even though this is all considered to be wave 3, you get 1, 2, 3, 4, and 5. So you get a 5 count on the way up. My belief is that we're probably going to get a 3 count on the way down. And so what we are looking at, and remember, this is just one possible scenario. There are many, and there's no way really to tell the future, but at the same time, we are looking at what is possible and what is our potential. As you can see, and we talked about this a little bit on Friday, that my belief right now is that if we are going to get a complex wave in here, what we'll probably see, and this is, again, a possibility, but we know that this is going to be the first of our wave 1 down. We'll call that our A wave. And then typically what we'll get, and again, this is high level Elliott wave speculation, because these can really unfold any way that the market wants them to, but we will get some sort of a bounce here, and you can see that we are getting this bounce here. And that bounce, in terms of where it should go, when we look at straight Elliott wave forecasting, we will look first at Fibonacci retracement areas, and then secondly, we are going to be looking at Fibonacci extensions, meaning that the market is going to move itself up a certain percentage. So you know that I have kind of pegged that right around 1503 to 1510. We will get more precise as that market moves back up. And then my feeling is that to complete this last part of this corrective wave, we will get some sort of a C wave. Now, a typical standard C wave will go below the A wave. In other words, you will get a scenario in which you get one down, you'll get your corrective wave up, and a corrective wave up in a correction in a bullish market, of course, is going to be up. And then you'll typically get something that goes below this A wave. Now, my sentiment right now is that because I am so extremely bullish overall, and because I believe that realistically the fundamentals have not changed, what has changed is that the market went up parabolically much too quick. I look at it as a release of steam when pressure builds, so to speak, and that's what these corrections are. My sentiment is we'll probably get what's called a truncated C or a flat C. A truncated C would be a C wave that doesn't quite go to the A, and then a flat would be a C wave that goes to or right above or right below the A. So that this A, again, is now going to be the standard in which we use to look at these other ones, meaning our B and our C. So really, that is what I'm looking at for the day. We're going to have to see really where this market wants to end up. We will watch it very, very closely as it begins to move into Hong Kong, London, and later tonight into New York. And at that point, we will make an assessment if we believe that this correction is over. Now, realize that that statement has a major caveat, and that is that if this will follow a standard Elliott wave count, then we should get an A, a B, and a C. If we get a singular sell-off, which I don't believe is going to be most likely, meaning the bottom and the end of this wave 4 correction is right here, then in fact we are already in wave 5 of major 5. But we really will not be able to ascertain that, even if the market continues to move forward, until we see it breach certain areas that tell us that this is not in a corrective stage anymore and not acting as though it is in a correction, and thereby reevaluate our assessment from there. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Monday for another daily review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange